Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, August 13th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video website or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. What we are going to do is talk a little bit about what happened last week and what we can expect in the coming week. And as we looked at last week's economic announcements, there was not a whole lot taking place during the week. So let's go ahead and look at the week to come. As we look at Monday, August 13th, very little there as far as what it is that we expect to see out of this first week in the market as far as economic announcements. Let's go back to that slide. All right, and so when we look at that slide, what we see is that Monday, there's very little offered. As we look at Tuesday, we see that on Tuesday we got PPI on Tuesday morning at 8:30, retail sales at 8:30. And business inventories at 10 o'clock. So definitely something there that certainly is capable of moving the market on any given week. However, we've not been seeing that much influence out of the economic indicators in America. We've been seeing an emphasis on European news and China news and Asia news. And that has been news. This has definitely been a news-driven market. On Wednesday, we see that we have the CPI at 8:30. And then as we look at the rest of the day, not a whole lot there that's going to move the market. Housing market is indicated at 10 o'clock. Probably not going to have much of a move on the market. Thursday morning, we go see our jobless claims, which we see every Thursday morning. Philly Fed survey has certainly been known to move the market on Thursday. So we do have a few things going on during this week that can absolutely have an effect on the market. Consumer sentiment Friday morning at 9:55. And then at 10 o'clock, we got economic leading indicators, which both are monthly reports. As we enter into this third week, let's count them. There's the first Friday, there's the second Friday, and there's the third Friday of the month, which makes this an options expiration week. Typically, what we see out of the first 9 days of the month of August is usually a great deal of weakness. We certainly haven't seen that. And let's go ahead and take a look at the chart for the week and see where we are as far as trend. So if we look at the trend, we see we are definitely getting lower, or rather higher highs. There's a high, there's a high, there's a high, and we just keep getting higher highs all the way up, trading within this uptrend. So our trend is up. All right, and as far as lows, we're getting higher lows. There's a low, higher low, higher low, higher low, and higher low. So getting higher lows. And now as you see, we've had 1, 2, 3, 4, 5, 6 days up. And so we are in an up cycle. Okay? Banging against the last 4 days, we banged against that 1406 area 4 times in a row. Now the real question is what's going to happen during the next week. So let's take a look at this in a little more detail. We see that we are in an upcycle as we are getting higher highs and higher lows. Our 30-day moving average is sitting right down here, and we are in an uptrend. So the next trend after an uptrend is a sideways trend. When will that happen? When we start spending time above this moving average and below this moving average. Then we will switch over to a sideways trend. But so far, we are in an uptrend. We are a bit overextended as while we were having little moves up, the news that we saw from around the country and around the world was basically China news and talk of the Germans backing the ECB and the such that really moved the market. When we looked at the unemployment numbers for the week, which came out on Thursday morning, we actually did beat the expectations. There was not as much unemployment filing as was expected for the previous week. So that was one positive note out of our economic indicators. But the market was moved, and it is a news-driven market, basically by European news. So what can we expect to see next week? Well, the air seems to be getting a little thin up here as we seem to be going sideways in this trading range. And if we actually looked at the volume, we see that we had a very low volume week during this move. And therefore, the air is getting a little thin. We'll have to see whether we pop above that 1406 or not. All right, with that in mind, let's take a look at the Dow and see what the Dow did during the same period of time. Looking at these days right here, we see that we had our big day up last Friday, and the Dow made little mini steps all day long, all week long, giving us a nice little candlestick, but having difficult going above this particular resistance point. So we'll see whether we can break up or whether with the low volume that's taking place, it loses its momentum and starts heading down. With that, let's take a look at the NASDAQ and see what the NASDAQ has done during the same time. See that we had a nice strong move out of the NASDAQ. Then during Tuesday, Wednesday, Thursday, and Friday, again, we had that same pattern where it kind of topped out and isn't having trouble going any further. All right, so with that, let's look at the Russell, the micro stocks, and we see that with the Russell, let's get to that slide. We see that it had to move up 4 days of the week. We were sitting in a very tight trading range. Again, not on much volume. As we see, the Russell finally broke out of this triangle, this symmetrical triangle, but is not breaking up with any great pizzazz here. And you notice we're spending time above the moving average and below the moving average. So this trend with the Russell is still what one might consider sideways. We'll need to go above this point for our breakup to see whether we're actually heading up with the Russell, as it has lagged since earlier in the year. It's been lagging for a couple months now. If we look at the overall indexes, looking at the Dow, the NASDAQ, the S&P, and the 500, and the Russell 2000, we see all of them are up positive for the week, as we see the percentages from 0.9 all the way up to 1.8 for the NASDAQ. S&P was up 1.1. And then if we look at the year-to-date percentages, we see that Dow up about 8%, NASDAQ up 16%, S&P up 11%, Russell up 8%. It's been higher this year, but it's really kind of holding its own, as here we are in August, which typically can be a weak month. Now, one of the things that we have going on this year is we have an election going on. And so many times during an election year, August can be one of the better months. So it seems like it is following that pattern so far. Be leery and careful of August, as we've had many pullbacks through the years during the months of August and September. So be careful of that bullish side. All right, with that, let's take a look at the VIX. Look like we dropped out of our trading range on the VIX. We're actually lower at 14.74 than we've been in a while. And so not a lot of fear in the market, as that market has not really had any big moves to the upside, kind of digesting this move that it's had. So we're getting a little low on this on the VIX, and we'll see if that doesn't start heading up as the market heads down. So let's see what happens during this coming week, during Triple Witching Week, with options expiration coming on this Friday. All right, with that, let's go ahead and take a look at the bonds. We see that they're trading sideways, not showing us any great strength, trading between 130 and about 123, 123.50. So nothing remarkable happening with the bonds. One is the type you might look at now, potential condors on the bond market, as we see that it really is trading within quite a trading range. All right, next let's take a look at the financials, and we see that the financials did break out a little bit. Notice the comparison that you can make between the financials and the Dow and the S&P, as no market heads up without the financials, with any durability, without the financials going with. All right, and with that fact in mind, let's look at our next ETF. We're going to look at U.S. oil and see that we got a little pop-up in oil, and we see that it actually pulled back a little bit on Friday, unlike the rest of the market. So a little weakness showing there in oil as we switch from that up cycle to a down cycle in a basically sideways trending market with oil. Next, let's take a look at our last ETF, and that's for gold. And we see that gold came down, hit the moving average, bounced up, and actually spiked up to this resistance point as we went into Friday. Watch for a potential bearish play on gold, as if the market does begin to pull back, if it follows its past pattern, it is at resistance and will pull back to maybe that moving average again, as we see gold trading within a specific range, and we highlighted it in the yellow. And so some potential to be made on possibly the downside of the market. Watch for lower highs and lower lows for your entry. Standard entry, and determine what your stops are going to be, and exactly know what your trade is before you get into it. All right, with that, let's look at the volume this week. As we said, the volume was a bit pathetic, and you'll see that during this 5 days, we had the lowest volume that we've had in quite some time. So low volume, market moving up, air getting thin, you know what comes next. So with that, and does one really expect a breakout with that kind of volume, as it's losing its momentum? All right, so with that, those of you that are gold members, stick around. We're going to look at our stocks to watch, look at how our stocks that we've been watching for quite some time, how they handled this move up in the market, with this steady strength in the market during the last week, and this steady strength in the market as we've been in August. For those of you that are not gold members, thank you for being aboard. And this is Butch Shorak, Options University, Monday, August 13th, 2012. And for those of you that would like to look at other free videos, you can get the website right at the end of this video. With that, I thank you, and we'll see you on Friday morning.